Is the everything bubble about to pop? I got some really cool stats. Today we're going to talk about real estate and the stock market. And let's jump into the video. And if you have great articles that you want to send me, go into the about section of my profile and there's an email address and send me those articles and we can have a discussion. So when I'm talking about the everything bubble, I'm looking at how the whole economy is going and how it's going to affect you and your money. So first of all, we're going to look at the housing market, real estate, right? One of people's favorite topics been searched at, and we're going to look at each and every one. So here we go. So first of all, we're going to look at the Florida housing market. It has been up year over year, and it has been reaching new highs all the time. So I got this data from Redfin, and it has been 2.3% year over year, and it is now more expensive than ever to buy in Florida. So now we're going to look at what might be the possible downturn of Florida, right? So when you look at Florida, there's high insurance costs, high property taxes, and one thing that I'm seeing is that people that live in that place in Florida, and once again, I was going to be also one of these people that would have moved with a remote job to Florida, hoping to make a California or West Coast salary in Florida, and then kind of live the Florida lifestyle way cheaper with a West Coast salary. And then I'm glad I did not, because we could not, the company closed down and we did not move to Florida, obviously, because we're here in Las Vegas. And so I would have been one of these people that would have gotten let go in that area when we would have bought a house. So Florida real estate has a few issues, how I see. I see people that moved there during COVID, during 2021, 2022, because of remote jobs, and now they're gonna be let go and need a new job. It's gonna be really difficult to find a high-paying remote job. So yeah, one problem there. Second of all, insurance, right? With Florida, hurricanes, all that kind of stuff, super expensive to get property insurance. So all these things relate into not optimistic approaches to the housing market, right? When you look at all that and then you add on top of the unemployment rate, that's going to make it really crazy scenario, right? Because if just one factor's there that's like not that good, you can still kind of make it, right? So if you're looking at just one area, like, oh, there's natural disasters, yeah, that's all right. But when there's multiple factors working against you, yeah, it might not work out, right? It will when more and more companies move down there. They might figure something out. But as a trajectory right now, with all these negative factors in there, you've got to be caution, right? So now let's look at Las Vegas housing market, right? That's where I'm at. So negatives for that place is, it's also reaching new highs, right? And it has been up 7.2% year over year. People are moving here from California because high cost of living and all that. And now, once people are unemployed, high unemployment, people don't come to Las Vegas, gamble. That means the casinos aren't making that much. I know we were working on diversifying all that, but I'm seeing that as a huge con of living in my city and seeing, where that goes. We don't have the natural disasters yet. We just have extreme heat. People say lake meat. That's not a real concern when you really get into the numbers, because we recycle so much water. We're like one of the top cities in the world to recycle the water, so we're not that that's not that much of an issue as I see it. And now let's go on to our neighbor on the West Coast, California housing market, right? So now we're looking at, they're also up 7.6% year over year, right? So that looks really good. What do they have going against them? Well, they only have like the insurance crisis working against them. Everything else, they got really great, working for them, right? Besides also company leaving. So they got companies leaving. That's a huge con too. But besides that, California has been a powerhouse, will most likely always be a powerhouse with the Bay Area, with all these other things. So I'm not too worried there. Besides, you can't get insurance, which makes it way more expensive, and the cost of living. But when you make more, you can kind of spend more. So those are kind of the things that I see in California. So if you're, there, yes, no, you guys let me know in the comments below, because all these factors, all these housing market factors, they all have the microeconomic working against you, right? So if you're looking at just one thing happening against you, you're kind of fine. You can kind of deal with it. But all of a sudden, there's multiple factors. All of a sudden, you're like, I gotta worry. I gotta, figure something out. So now we're gonna go into the stock market, right? Because it's the everything bubble. So now we're looking at stock market year, 1 year to date. The S&P 500 is up, and now let's do year to date is also up 12.7%. Even with the crash on Friday, we're still up, right? So when we look at the last month, now this is where it gets interesting, right? The last month of the S&P 500 has been down 3.9%, almost 4%, right? So is down. Let's go check what the NASDAQ is doing, 1 year to date is still up 13%. And now when we look at, 1 month, from 1 month's high, it is down 8.59%, right? So now we're looking at it, okay, what does that all mean? Well, people put stop losses in. Stop losses when you have an automatic trigger that says, like from the high or whatnot, it's going to stop. It's going to sell your stocks automatically because, you don't want to take that loss too much, right? So risk tolerance, right? You can, if you're risk averse, you might trigger a stop loss from 2 to 3% to limit potential losses, right? And so that is what these stock traders are doing. And I personally never did that. I've always been a believer in that it's going to come back. I've never had the heart or the like when it's going to go to 2-3%, when it drops the stock, then it's going to go. I always thought it's going to go back up and it's going to bounce back after 4%, and then it's going to go slingshot back up again. So I've never had like the discipline to put in stop losses when I did stock trading. I've never did it full time. I was just doing it on the side a little bit, but I also got burnt. So stocks are not really something for me. I'd rather buy real estate or buy something or buy index funds that are way more easy and I don't need to worry about it, or get a financial advisor, something like that, Fidelity, and they invest in the money kind of for me, because I just am not that great at it. I'm too emotional about it. And I always think that it's going to go back up. Happened with crypto too. I was like, it's going to go back up. It's going to go back up tomorrow. And it just never did. So when I look at the whole economy sector, right? What is one of the most important things is unemployment, right? When I look at all these things, housing market, stocks, all these other investment categories, you need a job. You need to make money. And if everybody in the economy is making good money, you can kind of outwork all these negatives, right? So if there's a hurricane in Florida, you can kind of repair your house. You can kind of outdo it and rebuild it, right? And the same in California. If you have a wildfire, you can rebuild. If it gets too hot in Las Vegas, you can buy a new air conditioner. But it gets really, really difficult if you do not have a job, right? So if you do not have a job, then you're relying on unemployment. And depending where you're at, unemployment isn't going to last for a long time, right? They say, like when you click on the Nevada unemployment tab, it says it's 27 weeks. But for when there's high unemployment, it's for longer. So I don't know what that means. I think if there's like a severe, like pandemic type of deal, you can be unemployed for longer. But I don't know when that triggers, if they have to do something at the government. That I do not know. So I'm gonna ask you in the comments below, what do you think is going to be the first thing that's gonna crash? Real estate, housing, stocks, bonds, what do you think? Because I don't think that houses are going to collapse anytime soon. As a whole of the United States, right? Because there are just too many different markets, and I think it's too market specific, right? So if you're in an area that's booming, you're going to be good. But if you're in an area that has low demand, companies are moving out, almost like Detroit, Michigan, like when car manufacturers move out and all that kind of stuff. And then you're like, oh my gosh, Detroit is, failing. Then you can't put that into the whole United States because it's just one market, right? So this is about real estate and stocks and bonds. I think once the fear thing kind of sets in and companies are starting to sell off, And institutional investors, people that invest your money, are going to say, I'm out. I need to exercise my gains and wait. Then you need to be out, right? And just start selling. And then you see everything is going to be bleeding. And the funny part is that when you look at things like Warren Buffett, right? He's always been saying, oh, you got to hold cash, you got to hold cash. And when Warren Buffett was selling stuff and he's like, oh, he hasn't realized all his, he's sitting on the sidelines, he's doing all this, doing all that. Now he's sitting on the biggest pile of cash ever. And people during the pandemic were like, he's so stupid. I think he lost his touch. And you can go look at these articles, and all of a sudden now he's sitting on more cash than ever. And he just liquidated some of his Apple stock, some of his other, and he's sitting on more cash than ever. So the question is if it's going to drop, then he's going to be the smartest guy in the room again, right? So he has a great thing that says, be fearful when people are greedy and be greedy when people are fearful, right? And I kind of think that that's a great metaphor for life, because you just gotta do what's best for you. And when people are greedy in stocks, he said that about t-shirts. He said, people see stocks, they should see it like t-shirts, right? When t-shirts go on sale at Saks Fifth Avenue, Bass Pro Shop, wherever you go shop, like Macy's, all these places, it says when you go and find t-shirts and they're on sale, people go and buy them. He says when stocks dips, you should also go start and buying them rather than not buying them and be like, I'm gonna wait for the next sale, right? So is the bubble gonna pop? Something's gotta give. And while unemployment is ticking up higher, higher, and higher, and people have less money, then there's gonna be less money in circulation, right? So what's also gonna happen is that this is the domino effect that I think is gonna happen. So you're gonna let me go. I'm gonna stop shopping at, outlet malls, at other stores. They're going to have to say, hey, we could not afford to pay rent this month at the at the outlet mall, at all these things, because we just can't afford it anymore. And now you're in trouble, because now the landlord's in trouble too, because the stores can't pay. And this is the domino effect that's going to take down systems, right? And so that's why it is so bad when you have a consumer-driven economy and people aren't spending. And it's really, really funny to see all these people in my comment section saying, oh, I'm trimming spending. And when you watch the news, they're saying, oh no, the economy's doing great. We've created a bunch of jobs. And now all of a sudden they're kind of saying, oh, just lightly, oh, the job loss was a little bit less strong than we were thinking. No duh, Sherlock, you guys raised interest rate to an ungodful amount, and now you're like, oh my gosh, Americans are struggling. And now let me ask you this, is now we're seeing an economy where there's so many people going to be unemployed. And I hear all these realtors online screaming that as soon as interest rates are going to come down, they're going to buy houses. According to my poll, that I did, a lot of people are not going to buy. Like almost like 85% are not going to buy. And there's like 10% that are. And for these people that say, oh, 500 people isn't the poll, well, you need to look at these other polls. They're like 1,000 people. And who knows how they got these people. And one thing is I tried, before I even started this YouTube talking about the economy, the economy and all kinds of stuff, I was actually trying out side hustles on YouTube. And I did these polls, and I've actually got paid to do polls. Is it a good money? No, you make less than minimum wage. But can you do it as from home? Yes. And I was filling out surveys just like that for Amazon gift cards to see about polls, how you can make, are you going to buy? Are you going to buy this? Are you going to buy that? Are you going to vote for these political parties? And I got paid. And after 5 minutes of it, and you had to work like an hour for like $15 or something. So after that, I became super numb to the text, and I just start clicking. At one point, you're just going to be so numb to the text that you're just going to start clicking random questions, and you don't even want to look anymore, and you just answer this, and this. And so that is what's going to happen to people when they're going to say, oh, these polls are, these polls are saying these numbers. And then I'm like, yeah, I filled out these polls and got paid to do it. And after the fifth question, they're so stupidly formed that you're just watching TV and just clicking random buttons because you're like, why would I care, So how accurate are these polls? Who knows? Who knows, right? So yeah, it is absolutely, absolutely crazy. And when you think about the whole economy as a whole, there's so many different elements moving at the same time that it's very hard to come up with individual predictions, right? But what we can know for sure now is that Intel and this AI movement is more expensive than not, because if even CNN starts saying that, it's like, oh my gosh, we didn't anticipate all this, and Intel is letting 15,000 people go, and they've already did a huge mass layoffs. And one thing nobody has told me yet is what have these people been doing? So nobody has come into my comment section that I've seen or wrote me an email about it. What have these people been doing at Intel that be let go at Microsoft? Were these people just getting paid and just to show up at work, or were they actually working on products? Because when you fire people, you notice that, right? So if you have a store that, like you stock, you stock stores in the morning or whatnot, if you're starting to let go 10% of people, you will know that the store shelves are empty, right? Or less full than they were because they can't, fill these stores up. And with software development, I do not know if they're just releasing software more slowly, but then they didn't all just fire 15 software developers, right? 15,000 software developers. So now I'm like looking at it like, who are these people that been fired, right? And where? Or is it from Dell, these people that said, I don't want to come back to the office? Who are these people? And when we're talking about the everything bubble is going to pop, is how hard is it going to hit? Is there going to be a 10% correction, 15% correction? What is the correction going to look like? At what point are people going to say, oh, it's a great deal, let me rebuy? Is it 20%? Is it 30%? And I have no idea how much that is. And the same with housing. Is a correction, the bubble, is that going to be 10%? Is that going to be 15%? Who knows what that is? And different areas might be hit way, way harder than others. So really, really interesting stuff. No straight answers, because you can't just sum up everything as a whole, right? Because there's going to be outliers. And these outliers are going to sway the market way too much to come up with an individual prediction. So a lot of cool data. Love the data. Love these articles. But I would not know if I would start buying the dip on the NASDAQ or on the S&P 500 because of the dips. I do not know. Do I think that NVIDIA, stocks all-time high, would I buy it now when it had these huge gains? I think I read an article the other day that said like 75 to 80% of NVIDIA employees are now multimillionaires because, stock options and whatnot. And would I buy this right now? I don't know. Because it's so difficult to predict what's going to happen. Is the AI movement and all this other stuff, is it how is it going to impact it? Is it going to be a winner take all economy and everybody else is going to not have a chance, and Nvidia is just going to be the name of the game when it comes to chips? Or is it going to be AMD? Is it going to be Intel if they're going to fix some stuff with their chips that they've had issues with, right? So yeah, really, really interesting stuff. Super curious to hear what you guys are saying. If you watched my videos, please like and subscribe. Let me know what kind of topics I should do. Have a discussion about it. And yeah, very, very interesting to see all these, all these different industries experiencing different pulls, into different direction because of, unemployment, right? And that's what I think it mainly going to come down to, is if we can create jobs again and get people hired, if this isn't going to be a bubble and we're just going to keep rolling, or if this is going to be the widowmaker, and it's just gonna cap a bunch of people. So let me know what you guys think. I appreciate it. So talk to you tomorrow.